Yo, what is going on, guys? It is Austin, and I want to record this video to talk about something a little bit different, right? I usually am, making the day trading recaps and day trading related videos. This is obviously still trading related, but I want to talk about swing trading because swing trading is not something that I typically do. It's not my bread and butter, right? I come to the desk every morning and my goal is to day trade for a couple hours, pack it up. But recently with the market volatility, I've kind of gotten back into the groove of kind of looking for those swing trade opportunities. For me, when I look to swing trade, I'm usually looking to hold a position for anywhere between 2 days to 7 days, or even up to a week and a half or 2 weeks. But I really wouldn't do anything for you know longer than that. I still kind of have that day trading mindset of very short term trading, but oftentimes I do look at stocks and I find that the setup is something that I like for longer than just a day. 2 days, 3 days, 4 days, I like it. A nice continued bullish move, or bearish move to the downside, whatever it might be. I might have reasons to get into a position that I want to be holding for longer than one day, right? When I come to the desk in the morning and I look to day trade, I'm looking for a pop, maybe a 10-minute long pop, 15 minutes, 30 minutes, up to an hour maybe. But sometimes you need to be able to get into a position to look for moves that might last longer, one day, 2 days, 3 days, etc. So Veru is going to be the stock that I'm going to talk about in this video as an example, and I have a bullish position in this stock in the form of options contracts. So I'm going to show you guys kind of what I have going on, and why I got in this position, and how options can be better in a swing trading scenario. And I'll show you too that it's not just this Veru is kind of a small cap stock. This is a bit of a wacky play, but you can do this in equities, large cap equities or mid caps as well. It works just as well, if not better, because you've got a little bit more liquidity in those options and etc. But I'm going to show you guys Veru to start. So this, I actually came to the table this morning to day trade, and often I'll pretty much find these swing trade setups when I come to the table to day trade. I might be coming to the table and then I realize, oh, I like this. I don't know when this is going to go up exactly. I'm not going to get in long for a day trade, but I want to get in some sort of swing trading position so that I can just have a bullish bias on this stock from now until my expiration date, and just let's see what happens, right? So that's kind of what my mindset is on this Veru play. It's very low risk, but it's very high reward if this stock does what I want it to. So you guys watching this video maybe 2 or 3 days later, 5 days later, a year later, whatever, you can go back and look at the chart of Veru and see if I was right. I've got a bullish bet on this stock. I'd like to see it hit $20. I don't know if it ever will, but I like the setup as it is right now. So you guys can go back and see. Of course, when I take one of these swing trades, this is not a 100% guarantee you're going to make money, but this is kind of what I do to look for kind of very low risk, high probability, or what I look at is high probability, high reward plays in the form of options contracts. And I would quickly say too, before I really get into this, is before I started day trading, I was only swing trading, and I was only swing trading options. So really, where I started out was with options. For a lot of people, that's not the case, but for me, I actually started with options and then moved to equity. So a lot of people, it's the reverse. They start with equity and then they learn about options later. I learned about options first, and that's what I was trading. Well, I didn't find a lot of success there, and I moved to equities, moved to day trading, found a strategy, found success. And if you guys want to learn more about day trading, I've got tons and tons of content on my channel, tons of recaps, tons of live trading videos. I'm on hold with those for a bit as I'm at home during the summer and whatever. But I'll get back in the groove. So definitely hit subscribe. I'm right at 1,000 subscribers, so if you guys wouldn't mind hitting the subscribe button and helping me out, that would be awesome. Right at that big milestone. All right, so let's talk about Veru. Um, I found this play from day trading today, and this is a stock that I've been watching over the past few weeks. Kind of all you can see in this daily chart, all the kind of volatility that it's found recently, and I've been looking at it on certain days where it's had these nice moves. But today I was looking at it just out of curiosity. I kind of flipped over to it, and I saw that it was quickly picking up after this initial morning sell-off. And when I looked over at the hourly chart down here, what I saw that was happening was it was creating this really bullish, hammer candle. This I guess you call this a shooting star. I don't even actually remember what you call this kind of type of candle. Forgive me, but really bullish candle. That's for sure. and we got a nice continuation on it. I kind of scuffed the day trade. I only came away with 200 bucks. Not the best, but green is green. But I'm not here to talk about the day trade. I'm here to talk about the swing trade. And so when I saw that this candle was forming, I thought, wow, okay, this is really bullish because what we've got here is kind of a double bottom. And then as I started to zoom out, right, zooming out to the daily, um, noticing that this setup just looks really bullish to me. So we've got all this price action back here, and if I go to 180 day, you can see kind of the resistance here at about 1650. It's gone as high as 1750, but quick rejections there, and then we've got pretty much a double top here, which is it is a bearish setup. But as we start to find buyers again right here, I'm I'm guessing again, you guys watching this video later, you guys will be able to see if my analysis is correct and if this stock is going to break through the 1650. But I think a break of this level 1650, if we do get that, I think a quick move to $20 could be in store. So if you flip back over to a daily chart, let me go to 20 years, you can see this stock did reach as high as 25 bucks in the past. So right, if we break through that 1650, could $25 be a back of mind target? You never know. Maybe it could reach there. I don't know if they did some, they diluted their shares, or maybe there's something that is different about the price action back here than up here. But I'm looking at this chart and I'm thinking, you know what? There's potential for this to go above 18 bucks, above 20 bucks. There's potential. It could happen. And so I'm happy with the risk that I've got on. I'll show you my options play in a second. But looking at this daily chart, you can see, look at the bullishness of this daily candle. I don't know what's going to happen tomorrow, but if assuming we gap up, we'll be up in this range, and all of a sudden it starts to look really good for a break through that level, right? So a double top, but as we quickly kind of find a higher low here, I think we could move above 1650. And so that's all that this play is meant to capture, right? Is if the potential for that move to 20 bucks. That's the intention of this play. So again, looking at it, day trading it, and then seeing kind of zooming out and realizing, I kind of like the kind of longer term relative to day trading, longer term, bullish setup here. I think there's a probability that this goes above a certain level. Let me put some risk on. Right, let me put some risk on. But if you're swing trading, right, and I said I was going to go into this. I actually have been swing trading the equity in this in days past. I think in here I was swing trading some equity. It didn't really work out, but when I say equity, I just mean the shares. So holding the shares overnight, and I got a little unlucky there, but I didn't lose money. Kind of break even trades, but on the swing trades, but. Regardless, the beauty of the options is, and I'm going to flip over to the options chain on Veru. It's a little funky. So this is a small cap, but I'll show you later in the video too that this is going to be able to work just as well, if not even better, on mid caps and large caps, ETFs, all of that. But on Veru, you've got these kind of funky strike prices: 14, 14, 50, 15. And you see, you can notice some of the spreads here, right? Let me see if I can find an example here. So 55, 65. So the spreads aren't actually tiers 25, 45. So there's a 20-cent spread right there. But regardless of that, if you wanted to bet on that move over 1650, right? You could just buy the stock, right? Why not just buy the stock? If you buy 100 shares of the stock at 13 bucks, you've put 100 times $13, right? That's $1,300 you have in the trade. So if this stock goes to zero tomorrow, you lose 1,300 bucks, okay? But if you buy a $13 strike, you've got $170 in the trade. So you've got a lot less risk. You can buy this and you still have the leverage of 100 shares, right? When you buy a contract, it's with the leverage of 100 shares, right? So you've still got the leverage, but you've only got $170 of risk. So that's kind of why the appeal of options, right? And that's why I like options for swing trading, right? If I'm going to be day trading, I'm only in a trade for 10 to 15 minutes. I'm gonna prefer the equity because with the equity I get that liquidity, right? I can get in and out super fast. I don't have to deal with these weird kind of these funky spreads on Veru. I'm not a big fan of all that. With the equity, I can get right in and out, and I can bet, if I'm in the stock for only 10, 15 minutes, 30 minutes, an hour, I can be nimble and kind of feel safer that the stock's not going to go to zero while I'm in the trade. But in case it is, I have the liquidity to be able to hit the bid and get out really quick. Anyway, so besides all that, I kind of now have talked about kind of my analysis on why I think the stock's going up, right? It has to do with that kind of bullishness of this hammer candle. As you'd think that when it hits this double top and it starts to sell back off, you'd consider it. You might think, oh, it's just going to sell off, it's done, right? But uh-oh, we're picking back up. So okay, we're not done, and we've come down here and now we've picked right back up. I don't know. To me, this looks bullish. So I've got the play again. You guys will be able to see if this is successful. But so let me show you guys what exactly I've got on right now. So right now, I'll flip over here on Veru. Here is what I've got on. I've got, okay, I don't know why this is. Can I move this? I don't know if this is gonna work. Move that to swings. So there we go. So this is what I've got on. I've got 10 contracts of the $18 strike. I paid $30 each for them. So that's $300 in risk, right? So if these go to zero, I lose 300 bucks total. That's 10 times what I paid for them, 30 bucks each. $18 strike, right? So betting that it's going to be above $18 by the time of expiration, that's next week. Then I've got 5 contracts a week out, so June 3rd, so that's the next Friday. And I've got 5 of those contracts. I paid 30 cents for those as well. The strike on these is $20. So if I flip over to the Analyze tab, and I don't know, maybe some of you guys have seen this before, but this is really nice. What this shows me is my kind of risk reward displayed on a graph with this play. So you see my contracts here selected at the bottom. I've got my 18 strike and my $20 strike. So I've got 15 contracts total here. And what these lines are showing me, the purple is I can change the date of the purple line. The purple line is whatever date I want it to be, and this shows me my profit at that date. So, and at a certain price. So on the x-axis we have price, and on the y-axis we have profit or loss. So you can see this red line right here. Let's focus on this blue line. So forget about the purple line for a second and just look at this blue line. This blue line shows us at expiration your profit loss at a certain price. So you can see my break even on this. If you look at both of these two different contracts, right? 10 here, 5 here. If you look at that as just one, think of it as just one strategy. It's one strategy. Think of it as one play. So this is one line depicting the whole play as I've got both of these selected. And you can see that the break even on the whole play is about $17.50. So if the stock finishes at 528 at the end of this week at $17.50, my strategy will be at a break even spot. Okay, so I'll be break even on the strategy. But let's start to look at, let's say it ends the week. Let's say the stock ends the week at 20 bucks. You can see right here it says I'll be up about $4,000 on this play if it ends at 20 bucks. Right? So what are the odds it's going to end at 20 bucks at the end of the week? Well, probably, certainly less than 50% odds, probably pretty low odds. But I don't know because I like this play. I'm buying this. I really like this daily candle. I like the double top and how it's kind of picking back up. Maybe it's not done. I like this. I think that there is a probability. I don't know if it's over 50%. I don't know what it might be. But again, for all the reasons that I described before, I like this play. And we've seen that in the past, this stock's gone as high as 25 bucks. So who's to say it can't get above 20, up to 20 bucks again in the next few days? It would have to have quite the run, but I think that it's got the setup that can allow it to do it. Again, this is low risk, but high reward if this happens. So odds are maybe it'll fail back down, and maybe the stock's done. Maybe tomorrow it'll just be done. I don't know, but all I'm trying to show you guys in this video is if you like a play, if you've got a bias, right, on a certain stock for the next few days in a certain direction, look for those low risk, high reward plays because you never know. If this stock goes to $20 tomorrow, I can show you guys how much I'll make. So $20 tomorrow, let me change the date here. So the date today is the 23rd. So actually the purple line's already showing me what my profit will be on the 24th if it reaches a certain price. So $20 tomorrow would put me at $4,000 of profit. So I do apologize. The 4,000 that I described before was the purple line. The blue line is showing me 2,600 at the end of the week. So if tomorrow it were to go to 20 bucks, then I would be looking at $4,000 of profit. And again, I still have the play on. Let's say that the stock goes to that prior high. Best case scenario, 25 bucks. I net 10 grand on the trade by tomorrow, and by expiration. You can see the difference between the two lines is really nothing. And it's a little funky because I've got two expirations here. So, but that's okay because by the end of the week, both of these will still be before expiry. So, or one of them will be at expiry. So anyway, all I'm showing you here is that total risk on this. I've got 5 contracts for 30, 10 contracts for 30, so 15 times 30, right? So that's 450 bucks all in. I'm 450 bucks all in on this trade, which, that's not no risk for me. 450 bucks, if I were to lose that, I'd rather not lose that. But best case scenario, let if this stock goes ballistic, which I think that it can, um, this is going to be a home run trade, and the risk reward and the percentage gain is going to be astronomical. Um, and a couple other things about this play in particular is that this stock, um, this stock has a 60 million share float, so not tiny, but not overly massive either to the point where it maybe can't reach those prices. I think that there could be enough buying in this for it to reach those prices. And on top of the kind of moderate size 60 million share float, this stock's got a 25% short interest. What's going to happen if this stock breaks over 1650? A whole lot of short covering and possibly a quick move to 20 bucks. So that's what I'm looking for. And again, I don't know if this is going to happen. You guys can see if this does play out. I sure hope it does, but again, it's kind of a far-fetched trade, but all I'm trying to get across is here's how you put on a swing position that, doesn't expose you to the risk of equity, right? I'm not risking the equity straight out. If I were to buy 400 shares of this stock, I'd be in for however, I'd be in for like 5 grand of risk, if, all in, versus I've only got 450 shares of risk, and I'm gonna net $10,000 if it goes to 25 bucks, right? And then, you know, that it, 25 bucks, that's a long shot, right? That is a long shot, and I understand that. But that's best case scenario. So 10 grand, that's quite a bit. But 20 bucks is a lot more reasonable. And if it gets there tomorrow, I'm up 4 grand on my position. That is already a 10 to 1 risk reward almost. Now, I mean, to just to be playful here, what if the stock goes to 30, 40, 50? I mean, stocks with this high short interest, in 2021, we saw AMC, GME. I mean, it's not unheard of, and I don't know, dude. Something about this stock kind of tickles me in a certain way that makes me think it's got that specialness to maybe get up to some of those higher prices. I don't know. Again, I don't know, but maybe. So, last thing I want to show you is that this strategy this can work on more than just small cap stocks. Now, I will say, if you look at the options chain of a stock like Apple. So let's just bear with me for a second as we look at Apple. So this is expiring at the end of the week. So even if you were to look at a contract, right? Let's say you thought that Apple might get it, you want to take kind of that same sort of you see a bullish setup in Apple. You have kind of that same kind of mindset of like, okay, it probably won't happen, but I've got low risk, and if it does, this is going to be a home run trade, right? If you got that mentality, let's look at the 150 call on Apple. So you can buy this for 39 bucks. You can see there's quite a bit of liquidity. I mean, this is literally Apple we're talking about. So the spreads on this are razor thin. Um, so 39 bucks. So for 40 bucks you can buy this, and let's quickly look at the chart of Apple. I don't even know what this setup looks like. I'm sure it's not bullish, but well, okay. So maybe you do think it can get back above 150 here, and so if you wanted to make that play, you could buy the strike for 40 bucks, 150, and so you can make that play. So this is kind of to show you that you can make kind of a similar sort of play on just regular stocks like Apple and some of these larger cap names. Now, I do want to just quickly make clear that something you really should have an understanding of options before you buy these options on before you're buying these options, you really do want to have a good understanding of options, because when I bought those contracts on Veru, and if you're buying these contracts, you have to have an understanding of the sensitivity, the implied volatility, what's going to happen to the price of your options depending on what happens with the price of the underlying. So this is these contracts are decaying very, very quickly. Again, these are expiring by the end of the week, and here your break even is $150.40. So you need this stock to get above $150.40 before you're even making any money, right? Before you're even making any money. So you have to have that understanding. So you shouldn't just go buying, these out of the money contracts, um, without understanding that when you buy these out of the money contracts, you're really betting that the stock's going to have a big move, right? You want a big move really quickly. But that's kind of my swing trading outlook. That's kind of my swing trading strategy over the last couple of weeks with the market volatility, is looking for these really low price out of the money contracts that I think are kind of diamonds in the rough that can kind of become kind of that can fatten up as the underlying kind of comes into that strike price. So let me give you one more example. As I flip over to my monitor tab account statement, I want to show you guys some of my trades on QQQ recently. So this is an even higher price stock, right? Look at the strikes here: 318, 315, 310. But look right here on April 29th, and I had a day trading recap. If you go to April 29th, you can go to the recap. This was my single best day trading day ever. I've been day trading for 2 years. April 29th of just this last year, just less than a month ago, was my best day trading day ever, in part because of these options. Now, this was a day trade, not a swing trade. I will admit, I bought these contracts on the 29th, expiring the 29th. So you can see the expiring here. They're expiring same day, right? But with QQQ, you can make those plays of looking for these cheap contracts that will fatten up. So look, I'm selling these for $1.30, $1.75, 324, and 420. I saw the print, and you can go to those that day trading recap and and see for yourself. The high print on those contracts was $520, so even $100 more. Now again, that was a day trade, so the volatility was high, and there was an especially large move in QQQ that day. But take a look at some of these other trades. Here's right here. I bought 285 puts on QQQ. These were expiring May 27th. 285 puts for $2 each, so $200 each. So that's $400 of risk. And you can see, look right here, I sold one of them for 815 bucks, and the other one I sold today for just over break even as QQQ was coming back up. So, but this one I think I saw as high as 950 bucks. You can see I'm taking profit and I'm making 615 bucks on this swing trade. You can see I bought this on the 17th and I'm selling it a few days later for 4 times the price. Here, again, I'm buying 3 contracts, 280 strike for 24 bucks each, and here I'm selling one of them for a dollar. So that's 4x what I paid for that contract. You can see I bought three, only sold one. The others I let go, and I believe those expired worthless. But I just let them run. I said, screw it. Because guess what? I'd already paid for the trade. I bought three of them for 24, that's 75 bucks, and I sold one of them for a dollar. So no matter what, it's a green trade, right? So it doesn't even matter. So I had those extra 2 contracts on for free. Then I just let them run. Now they didn't work out, but I still made money on the trade. So all is well and all is good in the world. And I just want to look here. I bought those on the 19th and I sold those on the 20th as well. Those expired. So that is kind of all I have to show you. But my swing trading strategy and my advice is look for those plays where you can see really cheap contracts, but it all starts with the analysis, right? It all starts with your analysis and looking at a stock, in my case, Veru, and just saying, I don't know what this stock's going to do, right? You never know. But hey, I think that this stock is got more fuel in the tank. It's got that short interest. It's got this kind of nice setup here. I really like this daily candle. Double topping at 1650, but guess what? If we go there again, I think we're going to break. And once we break that price, we're off to the races. We're going to see a huge short squeeze. Again, I don't know, but I'm betting that we will. And if we go back to 20 bucks, that is going to be a home run trade. So again, pick your spots. Be picky, right? Pick your spots. Swing trading is not what I normally do, but I think it is a good side hustle. And just don't go crazy with it, but pick your spots. And once you see those setups, get out in front of it, right? Get out in front of it. So I'm already up on those Veru contracts because I got out in front of it as soon as I saw that. As soon as I saw this on the hourly candle. Quickly after that, once I got out of this trade, I went in ahead and I bought those contracts, and at the end of the day we got this move in right there into the close, another dollar higher, and you can see that I'm already starting to be green on these contracts. I'm up 75 bucks on these. You can see these are already up. These are already up. They're not up much, but if we but I'm the trade is building, right? I'm up on the position. I'm going to let them run, but if you understand options pricing and how the prices move toward with the underlying price, I'm telling you right now, if Veru goes up another couple bucks tomorrow, these stocks are going to really start to rock and roll as the stock gets to my strike price quickly with more time in the on those left on those contracts. All right, so hopefully this video wasn't too confusing, and I hope that you guys came into this with already a little bit of understanding about options, because I'm not really explaining options in this video, but this strategy is an options strategy, and it's really just about looking for very cheap contracts, picking your spots, but looking for kind of those home run moves with very low risk. Again, it's not my bread and butter, but we'll see how this plays out, and I don't know what it's gonna do, but hopefully we can see more on Veru, and that's all I've got for you. So guys, if you did enjoy this video, please hit the thumbs up button, and guys, subscribe. I'm right at that 1,000 subscriber mark, so if you wouldn't mind, hit the subscribe button, and I will see you guys again soon. I'll try to do a day trading recap some point this week, and that's all I got for you. All right, bye bye.